think the distribution is happening. I really think people should go back and look at what happened after the NASDAQ bubble in early 2000 and how long it took. I mean, it took a decade to get back to the prior highs. And Bitcoin already took out the highs. So I'm separating it as it's a financial asset that needs to be part of people's portfolios. But the parts that it doesn't need to be part of people's portfolios, meaning the altcoins, the things that don't have institutional adoption, I still think this is related to a dramatic overhang on the illiquid markets that are having an impact on this space.
A long bull market conditions people to think an asset can only go up. But Jordi Visser argues that Bitcoin, like every financial asset, is not immune to distribution, macro pressures, and long, slow cycles. Visser says frustration in the crypto community stems from ignoring a basic rule of finance. You cannot disconnect an asset from the broader market backdrop. Treat Bitcoin as a financial asset, not a religion, and you can see how weak bond markets, sluggish venture performance, private equity markdowns, and stressed commercial real estate all feed into a period of distribution. If someone put $1 million into Bitcoin a decade ago and now sits on a 1,000-fold return, it isn't irrational for them to sell. He also compares today's environment to the aftermath of the early 2000s tech bubble. The NASDAQ took nearly a decade to reclaim its highs, even though innovation continued. Bitcoin has already exceeded old highs, which makes him constructive long-term, but he expects more selling pressure as early holders rebalance and as speculative assets, especially in profitable tech stocks and illiquid altcoins, continue to reprice. Long-term, Visser remains bullish because of AI. He argues that AI will funnel massive amounts of capital into new financial rails: Bitcoin, crypto infrastructure, and especially stablecoins. Historically, stablecoin market cap moved in step with Bitcoin, but now stablecoins are growing while Bitcoin isn't something he sees as temporary. He cites Brent Johnson's milkshake theory, noting that stablecoins may support a stronger dollar and higher Bitcoin, breaking old assumptions about inverse correlations. Meanwhile, AI-driven job displacement reinforces the narrative of inequality and creative destruction that originally led him to believe Bitcoin was part of the endgame. If you found value in this breakdown, please hit the like button, subscribe, and share it with other investors who are paying attention. We're here to keep bringing you sharp analysis and voices that understand what's unfolding. Thanks for watching.
Well, I think the concept of the IPO distribution, which I feel very strongly about, just in terms of thinking about what's been going on this year and just going back and putting it in the context of assets. And I think that's the one thing, whenever I speak with the community and I hear the frustration, there's always some correlation or some part of the asset market that fits into Bitcoin. And I mean, this goes with any IPO in general, meaning you can't separate the market from the asset. And in the case of Bitcoin, let's leave it alone as not crypto. Let's treat it as a financial asset. So the bond market's been garbage, which we know about. But I think if you break down the parts that are relative for Bitcoin and you go back and you go, okay, except for Bitcoin, what's actually worked over the course of the last 4 years inside the crypto space? The altcoins they're still not up to the highs as an index as they were back in 2021, 2022. And if you look at similar markets to the altcoins, you get into the VC world, you get into the private equity world, you get into the private credit world, you get into the commercial real estate world. All of those have been under some form of distribution and markdown for a while. So in theory, altcoins have actually done better. Bitcoin's obviously gone up during that period. So I just think whether it's 100 grand, whether it's 110, whether it's 95, whether it's 90 at this point, everyone needs to take a pause, take a deep breath. If you're in this for the trading side, there's still more selling that needs to happen. If you believe the numbers and you believe that about 10,000 people own about 33% of Bitcoin, you throw out Satoshi's number, you're still dealing with, 30%, 28% of $2 trillion. So if there was a true distribution, which I think there will be, I don't understand how it's hard for people to imagine that if you put $1 million into Bitcoin 11 years ago, I mean, you've gotten 1,000 times. You don't want to have 80% of your net worth in one asset. And so I think the distribution is happening. I really think people should go back and look at what happened after the NASDAQ bubble in early 2000 and how long it took. I mean, it took a decade to get back to the prior highs. And Bitcoin already took out the highs. So I'm separating it as it's a financial asset that needs to be part of people's portfolios. But the parts that it doesn't need to be part of people's portfolios, meaning the altcoins, the things that don't have institutional adoption, I still think this is related to a dramatic overhang on the illiquid markets that are having an impact on this space. And over the course of, unfortunately, the last 2 weeks for people that wanted to see some kind of a bid, now you've had a dramatic fall in a lot of these non-profitable speculative stocks. Well, this gets back into what I said. So I'm a macro person that spends my time thinking about what the world's going to look like in 5 years. So AI will continue to do two things for Bitcoin and for crypto that just keep me in the exact same path. And then I'll get into just kind of the near-term things that I think people should be looking at as part of this cycle. On the one side, AI is going to drive massive amounts of dollars into the new financial guardrails. So I don't think you can say Bitcoin and not connect it back to the innovation that will be happening. There's a reason why historically stablecoin market cap was very correlated to Bitcoin. So if the market cap was going higher in stablecoins, you'd expect it to be happening in Bitcoin. Well, now we have the market cap going higher, but Bitcoin's not going higher. And I think eventually that will normalize and people realize that the more volume and dollars that are going into stablecoins, the more that is the same function of what Bitcoin served. One of the things that happened with stablecoins, and I've listened to a lot of Brent Johnson in particular, if you haven't had him on.
Milkshake theory.
Milkshake theory, exactly. Well, he's recently done a report on stablecoins. And I think in a world where most people in Bitcoin say the dollar needs to weaken, he's actually making the argument on stablecoins that stablecoins are going to serve the purpose of something that I believe that initially Bitcoin was thought of. And that could mean the dollar goes higher and Bitcoin goes higher. And I think people have to separate these correlations. So I'm a big believer that the innovation that's coming from stablecoins, the network effects that are coming, the need for dollars to flow in the space eventually from the VC world, once they're freed up from what's gone on, will keep the innovation going. But you have to remember that the other part that we've talked about this entire time, and now we've seen with the election in New York City, the job losses or the job pressure that comes from artificial intelligence continues the main theme that I always believed in Bitcoin. So when I came to the conclusion in my mind that Bitcoin was a part of the end game, I've referenced Joseph Schumpeter here every single month that we've spoken. Creative destruction, he forecasted that eventually we will get to socialism. Okay. It doesn't have to be at the countrywide level, but the reason that socialism becomes something is because people start believing that they need to have money handed to them. And that's because of the inequality that reaches a point that people want. They want fairness.
Visser says Bitcoin represents a new financial system built on democratization of education, technology, and capital, and AI fits directly into that arc. Both are forces that decentralize opportunity and accelerate innovation. He argues that as the U.S. government builds clearer regulatory guardrails, sentiment will eventually flip, especially because current sentiment is already extremely negative. Historically, severe pessimism becomes a positive sign. He believes equities are still structurally supported by liquidity, and if stocks continue higher, Bitcoin will get its turn once whales finish distributing and ownership becomes broader. On AI, Visser stresses that adoption, not chip factories or power infrastructure, is the real driver. Big enterprises are adopting AI platforms like Palantir at a rapid pace, and AI agents/digital workers are already lowering costs and boosting margins. He compares today's AI-led profit stimulus to the old zero-interest rate era, but says this new stimulus is larger because cutting expenses creates more operating leverage than financial engineering did. Despite volatility, he points to new all-time highs in banks, the S&P, and European markets as proof that credit is healthy and the economy isn't breaking. With no widening credit spreads and strong market breadth, he views the current pullback as normal and expects Bitcoin's narrative to resume once short-term uncertainty clears. Let's get back to the interview.
Bitcoin is, at the end of the day, represented to me a new system where the democratization of a whole bunch of things happen. And the part of the democratization that goes on is in education. that comes with AI. AI and crypto are both democratizing forces, in my opinion, and they match up at the very end. So there has to be a new system. And with the government's embracing the new financial guardrails, we still have 3 more years of this administration to make sure that all of these things happen. And when the Clarity Act gets through, it's another bipartisan vote that will create the clarity on the structure. And I think that will serve as a point. One thing just to bring up for what you said, and so people can start to feel good. The most optimistic thing right now is that sentiment is so brutal. When sentiment gets this bad, it's good. And so if I go back to the fiat world, I still believe that the public equity market is going higher. If I thought we were going to have a 50% correction in equities, I'd be worried about Bitcoin at 100, at 98, at 97. But liquidity begs liquidity into assets that are going to do well. And Bitcoin will eventually get its chance again. And it will have worn through a lot of overhead supply from whales while the distribution goes on. And I will say it again and again. I'd rather have 1 million people owning $1 billion than one person owning $1 billion. If you want a stable market with lower volatility and a true bull market, I think the innovation's there. I think the macro structure is there. The inequality is there. And I also think that we're at a point where sentiment is just a big positive. Nothing is changing. I view the infrastructure story as a bit of a sideshow. It will get funded. A lot of it's going to be in debt, but it's the adoption that matters. I don't know how many times you can say that this is electricity and that the apps, the adoption, the businesses, the profit margins, it's all to come. We're still in the very early stages. We've only done the training side. The inference side just started this year and the adoption is growing. I know a lot of institutional hedge funds don't read the earnings report of Tesla or Palantir because they're overvalued. And so if they're not going to own them, and ownership from a hedge fund perspective is very low in those names. But if you go through Palantir's earnings that happened this week and you read the numbers, they're staggering. Forget the valuation. I just mean the adoption side. How many companies are now using Palantir? Forget the government. This is their enterprise, their commercial business. The numbers are going rapidly. The reason I kind of jump into that is the next phase. The AI agents, the digital employees that we talked about, which are already having pressure on businesses or on labor. That is the story. Whether people like it or not, if earnings per share are growing, then stocks are going to go higher, especially if the government is in a position, particularly right now, where they have to support the market. And I don't mean support it where they make sure it's going down. I actually mean making sure that the parts of the economy and labor, we're going into a midterm election. He's still got power to make sure once we get through the shutdown, I think the shutdown will lead to things happening. Once we get through IEPA and we figure out what is going to happen, because we're now in that uncertainty period. So I think people are getting nervous. But when you say AI stocks, and this is the thing that I really want people to know, I wrote something on this where it was connecting QE to adoption of AI. QE was hey, rates are going to be moved to 0, so you can go buy back your stock, which is earning 6%, and you can go borrow money at 0. It was financial engineering, the same thing that helped commercial real estate, the same thing that happened private equity, the same thing that happened VC, the same thing that happened all of that. 0 rates, the 0 interest rate policy was a massive stimulus for the market. This stimulus is coming from artificial intelligence through profit margins. And again, it's a bigger stimulus if you go through and realize that if you cut expenses by 5%, you're getting the operating leverage. That's a much bigger number than the financial engineering that was going on for companies with buybacks. So I do think the expense reduction leads to just greater reality in the equity market. And here's the thing I'll tell people that have happened in the last 2 weeks. So if people are getting nervous about the bull market, number one, banks made new all-time highs in the last 4 weeks. Equal weight S&P, I keep hearing how bad the breath is. Equal weight S&P made new all-time highs last week. The S&P made new all-time highs. Global markets, it's a similar story, meaning European bank stocks made new all-time highs this week. When banks are doing well, that means the economy is fine. Meaning credit might seem bad because we've got private credit going up, but if the banks are going higher, historically when we have bear markets, breath starts to weaken beforehand, yes. But you see that in equal weight S&P. That's not happening. At the same time, you see it in banks because their equity price starts going down while the debt is going, while the credit spreads are widening. We don't have credit spreads widening. So I think everything is fine. I think this is another normal pullback. And I do think when we get through this one, the Bitcoin story will start to resume at that point.
The idea is that Bitcoin and AI are moving together through a long-term shift toward more decentralized, tech-driven financial and economic systems. The current correction, heavy distribution from early holders, and negative sentiment are framed as normal phases in a market growing up, not a breakdown of the underlying thesis. As AI adoption expands, profit margins rise, and liquidity continues to support risk assets, the macro backdrop remains constructive. With regulatory clarity progressing and ownership broadening, the expectation is that once the market finishes working through excess supply and uncertainty, Bitcoin will resume its role within a stronger, more stable ecosystem shaped by both technological innovation and long-term economic incentives. If Bitcoin adoption increases while AI continues to expand corporate profit margins, could this combination create a new investment cycle like the tech-led bull markets of the past? So, stay tuned for clear, data-driven insights into the financial system. Don't forget to like and subscribe so you never miss our weekly updates. Thank you for your continued support, and we hope you enjoy the video.